Equity Mates.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Welcome to another episode of Equity Mates, a podcast where we help you learn to invest in roughly 45 minutes or less. We break down the world of investing from beginning to dividend so that you can hopefully make some returns. My name's Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce. Good to be with you for another episode.
Yes. Exciting times, Ren, because this week is going to be the first of our 2 live shows that we've been talking about over the last couple of weeks, and hopefully all of our listeners are aware that we are doing a show in Melbourne and a show in Sydney. But in case they're not, there is still time to get your tickets for both shows, and I think it's going to be a great evening. Ren, do you want to give us a bit of a rundown on what to expect?
Well, we released this on Monday, so in a couple of days, on Wednesday the 23rd of October, we will be in Melbourne doing our live show in partnership with Finimize, kicking off at 6 p.m. We've got a panel discussion with some of our expert equity mates. Ted Richards, the former Sydney Swans premiership player and now robo-advisor at Six Park. He's not a robot, he just works for the robo-advisor. And then a couple of other finance podcast hosts, Owen and Kate. And then someone from Vanguard, someone who we actually interviewed and released last week, Balaji. So a pretty exciting panel, a mix of expertise, and we're going to talk to them about what's happening in markets and what we've learnt this year, and might play a few games, and it should be a good night.
Yeah, absolutely. I think it's a great opportunity for all of our listeners to come on down and actually get access to these experts. We're going to be facilitating a bit of a Q&A session with them. So we're going to be fielding some questions from you guys. It is in conjunction with Finimize, a London-based tech startup. So hopefully some of their audience are going to be there as well, and it'll be a great opportunity for us to mingle and chat to these experts. So tickets are free. There's also going to be some beer and wine there as well to get us through the nights, and an opportunity to network at the end as well. So head to equitymates.com/Finimize. That's FINIMIZE, and secure your ticket now. It's at the General Assembly Building in Melbourne and also General Assembly Building in Sydney the following week, Tuesday the 29th of October. So Ren and I are very keen to do it, and hopefully we can record it as well for those that are unable to make it, but very much get on down there and we'd love to meet you guys. So looking forward to it, Ren.
Yeah, can't wait. And yeah, while tickets are free, it would be great if you can go and register, if for no other reason than General Assembly can then cater the right amount of free drinks.
Yes, critical. Nice, Ren. So today's episode, we're going to be doing a Basics 101 and doing a bit of a deep dive into market capitalization. Now, it's something that we have spoken about on the show before, but probably not in its own right. And it's something that, you know, most investors will have heard about at some point in their journey, because it's a number that is thrown around very regularly when it comes to discussing and comparing companies. So that's the plan for this episode. Ren, we'll have a look at what is market capitalization, why it's important and often quoted, what are the differences, or I guess the chunks that you can break down companies, and then also what it means as an investor and how you can use it. And then we'll close out with some exciting news around some new merchandise that's come in, Ren, and also read some reviews that have come in from our listeners. So ready to get stuck in?
Yeah, can't wait. Cool.
Well, market capitalization, Ren, a very common terminology in the investing scene.
Yes.
So what is it? So from my end, Ren, I'll throw a few things out and then get your view on market capitalization. So market capitalization in its simplest form is really referring to the total dollar value that the market puts on a company. And the way that you work that out is the value of its outstanding shares times its current stock price. So that's market capitalization, very simple to work out. So as an example, let's say a company has 10 million shares selling for $100 each. then that will give it a market capitalization of $1 billion. Now, if you want to try and work this out yourself, you can. Outstanding shares are very easy to find, usually in any of your major financial information providers. And then obviously the stock price, very easy to find as well. And multiply them together and it gives you your market capitalization. Anything from your end, Ren?
We should just clarify outstanding shares. I actually don't know why it's not called total number of shares. But really, all you're doing is you're looking at all the shares that the company has, and then you're multiplying it by the share price to get the market cap. Do you know why it's called outstanding shares?
I think there are some classifications of shares that probably don't come under outstanding shares. That's my understanding. I know outstanding shares is just stock that's currently held by shareholders. So, yeah.
In an effort to answer my own question. So I think outstanding shares are shares that have been issued. They're all the shares that count towards companies' market capitalization. And that includes, with some companies you have different classes of shares. So that includes all those shares. It also might include any restricted shares held by company officers and stuff like that. But it looks like there's a thing called treasury stock, which is, I guess, shares held by the company itself. They don't count as outstanding shares. So I guess you can't call it total shares because there's that weird category of treasury stock, which I'm not familiar with. But I guess for our intents and purposes, it's basically all shares that are able to be bought and sold.
Yeah, I think treasury stock that the company has bought back but then hasn't actually, I think they use the terminology retired.
Oh, okay.
So they actually sit in treasury.
Yeah, right.
Yeah.
And so that would be when a company does a share buyback and essentially buys the shares and then retires them or destroys them.
Yeah.
Yeah.
That's right.
Interesting. All right. We successfully managed to go down that rabbit hole and move away from market capitalization. But I think it's probably important. It's something that I've wondered. So, it helps me answer my question. Yeah.
Problem solved. So back to market cap. So market capitalization, its sort of primary use in generalist form, I guess, is just to determine a company's size. And that's when, when we talk about ETFs and those sorts of products, and we talk about, their market cap weighted, that means that they're using the market capitalization to determine which stocks should be in these ETFs or not. So we'll come to that a bit later. Yeah,
let's come back to that a little bit because I've got a note around market cap weighted v equal weighted. So Put a pin in that.
Okay.
I'm going to be a little bit nitpicky. So you said it is used to determine a company's size. And I think maybe for people, it definitely helps me understanding market capitalization and I guess contrasting it against some other metrics. Rather than thinking about it as determining a company's size, market cap is the figure used to represent a company's value. It's how valuable the market says it is. Because there's a lot of metrics that talk about how big a company is, its revenue, total number of employees, its how many countries it's operating in. They're all things that talk about the size of the business. Assets is a good one. It talks to the physical size of a business. But not all businesses are created equal. And so different companies may have very similar revenue numbers, very similar number of sales, very similar number of employees. They might have a similar physical size, but the market may value them completely differently just because of, whatever industry they're in, how profitable they are, what the growth prospects are. And so you might see businesses that are similar size, but are being given very different values by the market. And you can then see that difference in something like a price to sales ratio or a price to book ratio, because companies that are valued higher than the market will be higher in those ratios than companies that may be the same physical size but aren't valued as high by the market.
No, that's a good point. And I think you've answered the next question as to why is market capitalization important and often quoted.
Sorry, did I jump the gun?
No, you didn't jump the gun, Ren.
Before you move on from that, is there any other reasons why it's important or often quoted?
Not from my point of view. I think there's something that we'll touch on in a minute, and that comes down to using market cap as a sort of quick indicator of the level of risk that investors use market cap to think about risk when it comes to pooling companies. But we'll touch on that in a second. Is there anything from your point of view, Ren?
The only thing is we use share price a lot, and we use a lot of metrics based on share price. So, price to earnings, price to book, price to sales, all that stuff, earnings per share, all of that stuff. We use the share price, and then we use a lot of metrics that we divide by the number of shares to get those metrics. The other option, and I've met a few people who say, I don't care what the share price is. Why does that matter? I'm buying the whole company. I just look at the market cap number. And so there are some investors out there who just look at, rather than making all of their metrics based on the share price and divided by the number of shares, they just look at the total company and they say, the market cap is its value, and I'll compare that to its total sales or its total profitability. So I guess it's important because market cap is actually the value of the thing that you're buying at any given time. In some ways, it's probably the most important number of all the numbers because it's the actual price that you're paying.
And to your point in value, Ren, market cap doesn't always just refer to an individual company. Sometimes in the news, you might see on the front page of Sydney Morning Herald or whatever paper you're reading, $40 billion wiped off the market in the first 30 minutes of trade. Now, there they are referring to the market capitalization, but what they're referring to is the total market capitalization of the ASX 200 or the total Australian Securities Exchange. And it's calculated the exact same way, just total number of all outstanding shares from all companies times the price of each company. I guess what they're doing is just adding all the market capitalization of each company together to give you
that's probably an easier way to calculate
to give you the total value of the Australian Stock Exchange at that given point in time. So that's what they mean when they say 40 billion wiped off the market. It means that the total value of the Australian Stock Exchange has actually dropped by $40 billion or whatever it is at that point in time. So that's your brief definition of market capitalization, but it's obviously pooled into groups based on the value of the company. So you'll often hear terminology such as small cap, mid cap, large cap. And as the markets have grown over time, there's a few new additions such as mega cap, and we even go down to nano cap, Ren. So let's just briefly go through the breakup, because investors sometimes classify themselves as small cap investors. For example, we interviewed Henry Jennings. He was a small to mid cap investor, meaning that he only plays in this sort of value or size of companies. So the smallest one, Ren, is nano. Do you know what range that falls within?
I do. Less than 50 million.
Yeah, so these are often called your penny stocks.
Penny stocks is probably an American term. I know we sort of call them speckies.
Yeah. Speculative.
Because they're very speculative. I don't know if there's a term in Australia, but yeah, they're high risk, high reward plays. I think
big time. So your nano stock, your nano cap is less than $50 million. Then the next one up is a micro cap, and it's 50 million to 300 million in value. Then you've got your small cap, which is 300 million up to 2 billion. So quite a large range there. Mid cap is 2 to 10 billion. Then we start playing with the big ones. So the large cap is 10 billion to 200 billion. And now we're seeing mega caps, which is 200 billion plus. My question is, Ren, do you think we'll ever see something bigger than a mega cap now that we're seeing the likes of Amazon and Microsoft starting to hit the 1 trillion?
Yeah, 100%. Yeah. I think so. I mean, there's a big jump between a company that's worth 200 billion and a company that's worth 1 trillion.
Yeah.
I think you would have to start seeing companies that are probably the natural number is 1 trillion. So if you said mega caps were 200 billion to 1 trillion, and then let's come up with a term, maybe, I don't know, ultra caps or
ultra mega large.
Yeah, unicorn times 2 caps.
Unicorn squared.
I don't know. That would be something. But yeah, look, I think it makes sense that this will just keep creeping up. I mean, probably 50 years ago, I couldn't tell you what the largest company on the stock exchange was, but I would hazard a guess it would have been in the large cap range, not even in the mega cap range. And I'd hazard a guess it would be at the lower end of the large cap range. It would probably be double-digit billions rather than hundreds of billions. And so, we'll keep seeing this scale adjust. My question for you, so are these categories, are they the same throughout the world, or because Australia is a smaller market, do we have different sort of categorizations to, say, an America or an England?
These are not hard and fast by any stretch of the imagination. There's no sort of official range for small, medium, large cap. I couldn't tell you what the definitions are over in London or the States. Do you know the answer to that? I feel like you do.
I had a look before because it was a question I had while I was preparing for this episode. As far as I can tell, yeah, you're right. It's not set in stone by like the ASX or anything like that, these numbers, but yeah, they're pretty universal. You can assume that they're the same everywhere.
Yeah, which makes sense.
I mean, as we learned in Japan when we went to the Tokyo Stock Exchange, they, it seemed, had much more hard and fast rules around market cap because they had like the different markets. They had, I forgot the terminology they used. What did they use for their speckies? It was a strange term.
Mother? No. Something.
Mother, yeah. Is that right? Yeah.
Something along those lines.
Nursery in my head for some reason.
Mothers.
Yeah, mothers. Yeah, which we were pretty confused by at the time, but it's, because they're the sort of high growth and emerging stocks.
And it's interesting that they have a specific market for it as well.
Yeah, yeah.
We don't have as such here in Australia. Well, I want to have a look at the ASX 200, Ren, because you said, there's a big difference between, a $300 million company, a $2 billion company, and then obviously a $200 billion company. So the ASX 200 is the 200 largest companies in Australia by market cap. And can you guess, firstly, which is the largest company in Australia and a rough guess of what their market cap is?
It would be Commonwealth Bank.
Yes.
They are generally always up there. In terms of what their market cap is, I would just be guessing. I would say it would be, if it's not 100 billion, it would have to be pretty bloody close. I'll say 110 billion.
Yeah, not far off. So it's 140 billion. So it's sitting at the top end of the large cap, approaching a mega cap, although 60 billion still to go to hit that mark, which...
Yeah, which seems like a massive number, but
yeah.
I guess it's much easier to go from 140 billion to 200 billion than it is to go from 0 to 1.
Yeah. So then my question, Ren, the ASX 200, so we've got about... over 1,000, I think over 1,500 companies on the stock exchange altogether. We've got the largest cap at 140 billion at the top end of the large cap. Where do you think the smallest cap falls in the ASX 200? Is it a large cap still? Is it a medium cap? Or is it a small cap company, do you think?
So large cap was
10 to 200.
10 to 200.
Billion.
No, I doubt it does in Australia. I would say you're probably talking more around the 1 billion number. If you're talking about the 200th biggest company, it probably drops away pretty quickly, I'd imagine.
Yeah, so it does drop away pretty quickly and quite quickly. So our 200th largest company at the time of doing this podcast was Speedcast, SDA is its ASX ticker, and it's 241 million. So it actually falls in the micro cap range.
Wow.
The micro cap is 50
That's
to 300
huge.
million. Yeah. So the variance in our ASX 200 is from 241 million up to 140 billion. So quite a huge spread. And I guess that just goes to show...
that is massive.
Just goes to show the level of difference here in Australia in a market that's, relatively small to those over in the States. And so you can understand why if Commonwealth and the banks and BHP, these companies that dominate the top end of our market cap, ASX 200, when they have bad days, it really just changes the landscape of the market for that day because really their weighting is quite significant when you put that into comparison with our 200th, just is only 241 million. So yeah, quite a spread.
Equity, mate.
Yeah, that's crazy. 241 million, yeah. If you think about that, that's 200th. And then you've got thousands of companies after that still. Or over 1,000 companies after that.
Yeah.
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 Wow. So, I mean, I guess, that's why you invest in the ASX 200, because you just get such a large chunk of the total market.
There's an index called the S&P ASX 50, and it is the top 50 companies in Australia based on market capitalisation. So obviously has all your banks, Woolies, your miners, your big miners. Now, it makes up 62% of total share market capitalisation in Australia. So the top 50 companies just absolutely dominate in terms of their value. So there's a lot of small companies out there.
I would say that distribution is probably pretty consistent around the world. The top 50 companies in a lot of countries just dominate, and then there's a very long tail. Because I'm just thinking about it now, like, you in America, you've got your $1 trillion Microsoft, Amazon, Google, Apple, and it probably follows a similar distribution. The numbers are probably larger, but the more I think about it, the more I think that the top end of any market would just be a massive chunk of it.
It's not surprising. Right, so Ren, anything more from you on buckets, nano up to mega?
No, I think that's it. Let's get into how you should think about market cap in terms of your own investing.
Yeah, nice. All right. Well, do you want to kick that off then?
So I think for me that the main way that market cap really affects my investing is in regards to the ETFs that I'm buying and what I'm actually buying when I buy those ETFs. So we put a pin in a concept earlier, and I might pull that pin out and reintroduce it now.
Okay.
Most ETFs and most indexes are market cap weighted, and it means that the bigger companies take up a bigger share of the index. So really simple example, you said before that Commonwealth Bank is worth 140 billion, that's its market cap. And for ease of maths, let's say the ASX 200 is worth $1 trillion. So the total ASX 200 market cap, all those companies added together, is $1 trillion. Well, if Commonwealth Bank alone is 140 billion, that means it's 14% of the ASX 200. And if you're buying a market cap weighted index, it means that 14% of that index will then be Commonwealth Bank. And so your smaller companies, they're a smaller percentage of that index. So that's market cap weighted. That's the standard. And what that means is that the bigger companies move the index more because they're obviously more of the index. So Commonwealth Bank at 14% of the index, as it goes up and down, it will have more of an effect on the overall performance of the index than the 200th company whose name I forgot. You just said it. It was like Speedcast or something.
Yeah.
Speedcast, yeah. Because they're a tiny percentage of the $1 trillion overall index, their day-to-day movements are going to have less of an effect on the overall index. And so when you're buying your standard index fund, your standard ETF, what you'll find is that you're more exposed to the bigger end of town. Now, there is an alternative, and they're called equal weighted indexes. And so rather than Commonwealth Bank being 14% of the index and therefore being 14% of the ETF, instead they say, all right, well, here are the 200 companies in the ASX 200, and we're going to buy an equal amount of all of them. So each company, regardless of its overall size, will be, if it's 200 companies in the index, each company will be worth 0.5%, so 0.5% of the overall index. And in that instance, the performance of Commonwealth Bank and the performance of Speedcast will have exactly the same effect on the overall performance of the index. Does that all make sense?
Yeah, that makes perfect sense. So my question is, well, two-part question. A, what is your preference now that you understand the impact that a weighted ETF has over a non-weighted? And also, do you get a choice when it comes to buying ETFs to choose between market cap weighted and not? Or is there more of a preference now from ETF providers to provide one more than the other?
Both good questions. So you definitely get a choice. You just have to find the ETF. So in the details around the ETF, it will say if it's market cap weighted or equal weighted. So in Australia, we're talking about the ASX 200 a lot. You'll see that most of your standard ASX 200 funds, your Vanguard fund, your BetaShares fund, they're all market cap weighted. As far as I can tell, there's one in Australia that is equal cap weighted, and that is VanEck Equal Weight ETF. Its ticker code is MVW, and it is equal weighted. So the number one company and the number 200 company are weighted the same. So they buy the same amount of each of them. So that's in answer to your second question. In answer to your first question, which do I prefer? In the interest of full transparency, I don't own any equal weighted ETFs. I've just never taken that plunge. But the more I think about it and the more I look into it, the more I think that it's something that I want to add to my portfolio. I can see the logic in having an equal weighted fund. I guess it makes it more volatile. Like the price movement will likely be higher because you're equally exposed to every company's movement rather than being overly exposed to a few companies' movement, and those few companies being steadier, larger, more reliable sort of companies. So there's probably more volatility in equal weight ETFs, but there's probably more upside as well. And that's just because if you think about the ASX 200, there's likely more growth in some of the smaller companies that are earlier on in their growth cycle and don't have as big a market cap because they're still growing, but they're really going for it, rather than some of the bigger companies like Commonwealth Bank and stuff who are more consistent and steady growers. In my mind, there's more upside by equal weighting and getting more exposure to the smaller companies in an index. I quite like the idea, so it's probably something that I'll look at adding to my portfolio in the coming months.
Yeah, nice. The alternative to an equal weighted portfolio, if you're looking to get access to that upside that you were talking about from smaller and mid-cap companies, is to find ETFs that solely track the lower end of the market capitalization sort of spectrum. So there are a number of ETFs out there, particularly in America, that you can invest in that will only track the small cap index or the mid cap index. And that way you're removing those large and mega cap companies that don't necessarily give you the capital growth that some of the smaller companies would. But I just want to use that point that you were just discussing, Ren, to also address risk versus reward with market capitalization, because it's an easy way of identifying where a company might be at in its life cycle, as you just mentioned, Ren. And also you can use it as a very sort of quick way of determining the level of risk that you might be taking with a company. So, for example, if we take micro or nano to small caps, these are companies that are very young in age and perhaps are serving niche markets or new industries. And because of that, I guess they could be considered higher risk investments due to the fact that they're quite young. They don't have as many resources as some of the larger mega cap companies do, and they might be a bit more sensitive to, say, economic slowdown and broader economic events. But that's the risk. However, the reward is that if you get in these companies early and they do pay off and start to get some great growth and momentum behind them, then the capital growth that you can get and the increase in share price can be very rewarding. On the flip side, if you look at a large cap company, your Woolworths and your CBA, it's very unlikely that if you invested now that you're going to see sort of 100% return. That would be very unusual because these companies are so far into their business life cycle. They're very mature. But what they do bring is that sort of consistent behavior when it comes to stock price movement, revenue, and then also, they have dividend payments and that sort of thing. So the reward might not be as great as the small cap, nano cap companies from a capital growth perspective, but the risk is certainly a lot less than investing in a company that's worth $50 million as opposed to $140 billion. So using the market capitalization as a way of quickly understanding what is the risk that you might be taking versus the reward, and using that as a strategy to sort of build your portfolio is important. Anything to add, Ren?
No, I think it's a good summary of where we are in terms of market cap, how to think about it and how to use it when you're making investment decisions. I think we've done a pretty good Basics 101 on that. Is there anything else that you think we need to touch on?
No, I think covered it pretty well. Super simple metric to understand. All stocks, you can find the market capitalization very, very easily. It's always one of the first few metrics to be quoted across all your broker platforms and financial websites. So look out for it. And yeah, it's pretty important to understand, but also very easy. So Ren, before we close out, we were going to discuss merchandise and reviews.
Yes, I had a nice segue for that, but that's all right. Let's get into it.
Oh, sorry, I just killed it. So, Ren, we've been working hard over the last couple of months to get some much-longed merchandise up and running. We now have an exclusive set of Equity Mates t-shirts that we'll get up onto our social channels so that everyone can have a look at them. So they're available for our audience, and they look great, men's and women's, all sizes. However, we do have a limited edition first print run. So these are going to be for our keenest of listeners, but you have a bit of a way of wanting to distribute these, Ren.
Yeah, well, as you said, we only have a limited amount, and so we were talking about how we give them out or how we distribute them. Now, we could just put them up on our website, maybe sell them and just say first in, best dressed. And look, we may end up doing that, but we figured we want to give these the first ever official Equity Mates merch. We want to give it to our biggest Equity Mates. And so we're thinking about how do we give everyone an opportunity to access them. And so what we're going to do is we're going to leave it up to you guys. We'll give them out for free to people who show how big a fans of Equity Mates they are. I guess it's up to you. If you find a way to share the love of Equity Mates or to show how big a fan of Equity Mates you are, we'll send you for free some of this exclusive first run merch. Eventually we'll set up an e-commerce site, so if you don't want to get an Equity Mates tattoo on your back or send an all-staff email to everyone at your work celebrating Equity Mates, that's okay. Just wait and you'll be able to pick one up the old-fashioned way. If you're itching to get one now, show us. Do something to show how much you love Equity Mates, to share the love of Equity Mates and to spread the word, and we'll send you some exclusive merch as a thank you.
So tag us in your social media, send us emails with pictures of proof of any way that you have managed to convince non-Equity Maters to become Equity Mates. We want to see the love shared around, and we will send you some free shirts. But I mean, it's got to be big, Ren. We don't want to see someone who's just, tagged their friend on an Instagram post or something. We want to see skywriting. We want to see signs on bridges. We want to see, as you said, tattoos on the back would be huge. I'd be willing to donate
would be huge.
all shirts.
Here's my commitment to listeners. If someone gets an Equity Mates tattoo, not only will we give you a shirt from this initial print run, but I'll design something especially for listeners that get an Equity Mates tattoo. An exclusive piece of merch that we won't ever give to anyone without a tattoo. Do it.
Do it, Ren. Yeah, so look, we've got a bit of a wait list for people that are keen to get their hands on these shirts, but we are going to be giving them for free to those who show us the love. As Ren said, that's not going to last forever.
The offer might be up forever.
Yes.
But eventually we're going to also sell them.
Yes. So very unique opportunity to get your hands on the first print run ever of Equity Mates Investing Podcast merchandise. You never know, these shirts could be worth a mozza in a few years' time. Right, Ren?
That is the plan.
So to close out, Ren, we've got a couple of noteworthy reviews from listeners that have come in. We're still going through them and pulling out some of the ones worth reading. Now, Ren, a couple of colleagues, even at work, have mentioned this, and a quote and a review's come in, and you're going to have to refresh my memory because we've done so many episodes that I don't necessarily remember this one. But you have been getting some laughs from the quote about Brazilian nightclubs. So this has come in from DMG45, and they said when Ren quoted, "They invest in nightclubs." And that's what Ren thinks of Brazil and how to invest there. He loves the show and would recommend a listen to anyone. But do you recall what we were talking about there?
I recall the episode. It was our Investing Around the World episode. And you talked about a Brazilian company that made paper. But I don't remember the joke. We'll have to go back and listen to it.
It's causing a stir, so we might have to go back and listen to it and find what the quote is. But this next review's come in from Knock Knack Paddywhack, and he goes, "Ooh, yeah," or she, "I love this podcast. The dulcet tones of the presenters are reminiscent of a 1970s phone sex hotline, getting me all hard for investing and waiting for the inevitable happy ending where there comes a hot torrent of thick wads of juicy dividends." So Knock Knack Paddywhack's got it sorted. Glad we can be of some assistance.
And I think we should say that if anyone else wants their reviews read out, no matter how much innuendo, Bryce will read it out in his 1970s phone sex hotline voice. But yeah, just put a review up. We'll read them all, and if it's a funny one, we'll read it out.
Absolutely. Well, Ren, we'll leave it there. Looking forward to seeing who can kick off the Equity Mates merch challenge. And also make sure you head to equitymates.com/Finimize to grab your tickets for our live show starting this week in Melbourne and Sydney the next. So very much looking forward to that. Ren, we'll leave it there.
Nice one.
Equity Mates and the people appearing in this program may have positions in the companies mentioned. This is general advice only. Please speak to a financial professional to understand how it may pertain to your individual situation.
Equity Mates.